All right, hey there, boo-boo. Hello. How are ya? How's your mom? Good morning, everybody. It is Thursday, 8:02 a.m., February 4th, 2021. Today, we're going to cover technical and fundamental analysis. Yeah, boy. Can't wait. Love this thing called Forex. My name is Wayne McDonald. He, him, his. Been doing this for almost 20 years, so feel free to ask questions. It is the raison d'etre of why we are here. So thank you for being part of Forex.Today, the YouTube community of over 17,000 foreign exchange traders. So without further ado, 3, 2, 1, get on with it. So let me remind you that trading is risky. It is not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So therefore, please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So good morning.
Snowed FOMC voter master appearing live in a CNBC interview currently.
Guess that'll work, huh? I'll sit on the floor. Hey, good morning. So ask questions, get involved. Let me know how I can help. Treat your fellow Forex traders in the chat with dignity and respect. If you are watching live or if you're watching a recording, please stretch the mouse all the way out and click the like button. Considerable effort will be put into today's webinar. I hope it's not a waste of your time. I'd recommend if you find a few things that are helpful or something that you liked, you would document that in the recording below the video. Could I check pound? Yes, of course. So yes, pound is moving today, but we covered that on Monday. We knew it was going to move today. I asked you if you were going to trade it before today. Obviously, we're going to need to cover what the Bank of England has said. Okay, I'll do that for you. Don't worry about it. I got you covered. So, cool. So thank you for being here. Take notes, all that kind of stuff. Thank you for the positive energy you bring every day. I'd also like to thank Traders Way for being part of our community as well. If you are so inclined to actually need a broker, you should have one that you trust and respect. And for me, that is Traders Way. Please visit tradersway.com and open up a demo account and let them earn your loyalty and respect like they have earned mine. All right. So how many people here read the monetary policy statement recently, like 15 minutes ago, released the monetary policy statement? How many people have read it? It's been out for less than an hour. How many people have read it? Yeah? Guy, reading it now? Not done? Yeah? Henry, full show. Okay. Let me give you a summary, just sort of in a nutshell. COVID is hitting spending and income and jobs. However, vaccines should help the UK economy recover rapidly later this year. Inflation is below the Bank of England target, and therefore, the committee is keeping interest rates low to support households and businesses. Now, how long did that take me to actually do? To come up with that summary? mean, it's very helpful, right? Do you have enough time to do this kind of work? Let me show you how long it took me. If you read it and you go to the statement, monetary policy statement, just released, they say, in a nutshell, COVID is hitting spending, income, and jobs. Vaccines should keep the UK, should help the UK economy recover rapidly later in the year. Inflation is below their target, and they're keeping interest rates low.
That will cancel up to 50,000 of student debt.
You don't have enough time to even do that? Come on. Tisk, tisk. Wayne, I want to be a currency trader. I just don't have the time. Uh-huh. So anyways, it's so beautifully accessible. There was a time in my life and career that wasn't so beautifully accessible. Yeah, Johnny wants to read the full report, and of course that makes sense, but I mean, that 95% of currency traders don't even have the time or inclination to do even that, right? And that's the point. You either do or you do not. Theta says, so no need? Well, if you're a professional, you would. But what my point, Theta, is 95% of traders don't succeed in Forex, and 95% of traders are not even willing to put in that effort, yet alone actually download and read the report. And I'm just suggesting, of course, that there might be a relationship between the two. Okay? Well, Johnny, here's how I handled it in the beginning. I would read it and I would kind of come up with my own summary, but I would also highlight the things that they're talking about that I don't know. And I'd create a big list of things I don't know about. What is transitory inflation? Well, I don't know. So I'd write that down. And I'd, Google it. Okay. Okay. So anyways, I think you guys can do this. You just need to do it. Okay. All right. Cool. So anyways, dollar's still strong. Yen's still strong.
Yeah, we're still waiting the start of the Bank of England post-rate decision press conference. Bottom of the hour, we'll get another rate decision, the Czech Central Bank, which has indicated potential hikes at some point this year. They're expected to keep policy steady at today's decision. We'll get that.
Okay, we don't need to cover the Czech interest rate decision. So anyways, one big thing that's going on in the moment, let's go to this euro buck. Hey, look at that. We made it to 120. Yay! Hey, we made it all the way to 120. We're sitting at 119.95. Whale oil B. So I think we had that over here, though. Let's move that to market. Do we have it on this one? No. Probably pivots dollar. Okay. Cool. Oh, for sure. Okay. So we made it down through the 20. Remember yesterday I had a question about buying it at 20, and I said you could, but I wouldn't buy the left touch. I'd buy the right shoulder of a double bottom, right? That kind of thing. How about some oil too? I'm happy to do that, Reginald. Thank you for asking. Well, 888, they're all one-off payments. So, yeah, so one is it in the $5? I don't think it's in the $5, but it's in the complete. Not the basic kit, but the complete kit. Cool, right? So anyways, very nice. remember where this fits in the context of time. Okay? We got a plan A and plan B in here, and I'm waiting. Can we do Bitcoin? Sure, I'll do Bitcoin. Okay? Very cool, though, huh? How many people would now agree that January did show signs of dollar strength? Yeah. It's important that we remind ourselves so that you know again in the future. I'm trying to anchor this. Thank you, FM. Yeah. Yeah, Victor's like, of course. But we have to anchor this knowledge, otherwise it just slips through your fingers through the cracks of time. It's either an unbelievably lucky guess that 16 to 24 to 32 weeks ago, I told you it would happen. I told you it would happen the first week. Okay, I told you in the third week there'd be a false rally, and that would probably be lower when February starts. Now, I also said, yeah, it could be higher, could be. We don't know for sure. But the idea I want you to remember is that not only was that expected, but it was also planned for. Okay? And that as a coach and mentor, I was discussing up here, out here. Cool. And now, I still think we're early, but we went from here to here, and now we're kind of at the first place where, yeah, it could start going up. But like I said yesterday, it's early. I have to wait. I'm obligated to take the shot. Not this shot, the next shot. But it could fall further. In fact, our plan B is here. And I think what we had discussed is this would be up and then down. Okay? So I think what we said is up tomorrow during non-farm payrolls and down next week. And that would get us down to this level, which is, again, sort of like, maybe time, maybe not time. Okay? Okay. Okay. Cool. All right, so let's focus on the pig. Let's get the same time frame: 4 hour, 4 hour, 4 hour, 4 hour, 4 hour, 4 hour. Okay, cool. Pound stronger than the dollar. Pound stronger than the euro. So we got the euro dollar is wrong. Okay. Pound stronger than Norway. Pound stronger than the Swissy. Pound stronger than the Aussie. Could be related to the central bank. This is why on Monday I went through the calendar. So put that into perspective. Why do I even do that? First of all, I know you already know it, so me doing it is sort of redundant. But I want you to think about which pieces of news move the market and which don't. And central bank policy statements move the market. So this is an event-driven strategy per se. You know it's coming. Are you interested in the trade? Okay? So you were either preparing yesterday or the day before, or you were ready, willing, and able today when it was happening. You did something. But it's on the calendar and you know it's going to move the market. So how do you handle that information? Okay. So what do you see here? What was the real news today? Does anybody know? What was the real news? Let me just say it wasn't on that summary. On the summary I read to you, it wasn't that. Well, risk on is not a reason, it's a consequence. No negative interest rates. Thank you. Conrad nailed that. Yes. No negative interest rates as of yet. Okay? Boom. You understand that? Lowering interest rates lower for the Great British Pound would be negative for the Great British Pound. Saying that they've gone as low as they can go and they're not going to go negative, which is not lower, then you've printed a floor, which means therefore only up, meaning there's no more down. How do you translate no more down? Maybe up. Okay. So like later, excuse me, later in the month, later in the year, I believe the dollar will weaken. So maybe you start tiptoeing into this stuff. You have to make a decision on the pound. Okay? You got to make a decision on the pound. Are you a buyer or are you not a buyer? See, if you're a seller, you love this. You're going to sell this high. Okay? Let's update the chart. What else do we know? Well, on Sunday, as a bear, you would have sold it here. And on Sunday, this was your target. Actually, that doesn't look quite right because this was the target. So a couple of things are going on here. Bulls are buying it and bears are taking profit. So let's do the bearish point of view first. Okay. Bears sold here. It's a weekly M3. Bears had a target of here, weekly M1. So their plan was sell the M3, go for the M1, and get out. That's called a swing trade. Now the position trade is the longer term trade. And the bulls now had a plan of buy the M2 and drive it up to the M4, which is so high it's not even on the chart. It's hundreds of pips above our top. Okay? What do you think? That's why I call this template confluence. We're looking at the confluence of weekly and monthly trade plans. And I've always been fascinated how the technicals and the fundamentals line up perfectly like that. Okay? Cool, right? So now what? Well, I don't know if you're a bull or a bear, and I don't know if you're planning next week or not. But if you're planning next week as a bull, I think you would buy low here or buy low here as a double bottom. Better write that down. Now, what about bears? Okay. Well, a bear is thinking like that or like that. PF, this seasonality thing is not a trick. It's not like it works for one thing or works for not. You either understand global macroeconomics or you don't. It doesn't work. It is. It just is. It's like saying, well, it snows in the winter here. Will it in Canada? Will it snow in the winter in the United States? And will it snow in Europe? And what about Russia? Will it snow in Russia too? Like, it's not a guess. Like, it snows in the winter. Okay? You have to understand it's like the laws of nature. As long as you're in the northern hemisphere, it'll get colder in the winter. Right? It'll get colder in January than July. The opposite is true if you're in the southern hemisphere. You're like, well, how do I remember all that? Well, you have to understand what side of the planet you're on. The trading is very similar too. Should you be buying dollar or selling yen? Well, they're related. Why are they related? Well, it's the law of nature. It's what we do. It's a thing. It's not a trick. Okay? So I don't want you to think about that. It's right. Right. So that's what I'm saying, PF. Then there's something else going on right now with Great British Pound. Okay? And remember, I'm shorting the euro because of the dollar. So I'm trying to explain these connections by giving you examples. Okay? But don't memorize like it's a trick. Like, oh, well, I guess I sell euro dollar in January because Wayne has this cool trick, the seasonality thing. But what do I do with other currencies? Well, then you're missing the whole point. Right? I'm not isolating euro dollar. I'm talking about everything when I mention that. Okay? Yep. Yeah, so right, so the question is, if you know winter is coming, then you need to adjust, especially if you have a crop full of fields. A crop full of fields. I think, what? A field full of crops. That would be much, right? Yeah. You picked a fine time to leave me, Lucille. 4 hungry children and a crop in the field. How's it going? Been through some good times. Something through bad times. This time the hurtin' won't heal. You picked a fine time to leave me, Lucille. Anyways. So that's all, PF. I don't want you to think and like isolate it there. I want you to think how it would affect everything. And then, of course, the other side of that, PF, is if you're wondering like, well, why was pound dollar not as effective as euro dollar? Think of it like a high school or freshman college class where they would say, well, compare and contrast the two. Okay? That's what I want you to look at, right? I want you to say, okay, dollar's dollar, and dollar was affected just like Wayne's seasonality thingy. Okay, great. So then what was similar between the euro dollar, or what should be similar between the euro and the pound? And then what was different this year between the euro and the pound? Why was there a lack of correlation? And you should be able to write that down. Okay? Marina says, good to hear Grandma yelling again. Yeah, but the only problem that I have is when the government gets involved with headline news, like, oh, well, this Robin Hood thing, everybody's talking about it. What's going on? Maybe the government should get involved. The government should not get involved. That's oh my God. That's the part I get afraid of. And the other thing, and I don't like to go political, but sometimes, we're trying to push through another 1.9 trillion. Did you know there's still $1 trillion in the government accounts based on the other stimulus packages we've already released? And we haven't even given the money out yet, and we're already doing and planning and pushing through another 2 trillion. Like, nobody even needs it. And that gets me all crazy too. I don't like when the government goes too far. Oh my gosh. So I'm getting afraid. I'm getting very afraid. So with Grandma Yellen, now representing not the Fed, but the actual federal government, has to get involved because social media jacked a couple of stock positions. Why? Well, it could be fraud. What do you mean fraud? People can do whatever they want. It's a market. It's a free market. They can do whatever they want. They want to gamble their free money they got from the government on GameStop, then good. I hope they make a ton of money, and if they lose it, they shouldn't have had the money anyways. Like, no one in Washington is saying, well, maybe we have a problem. We gave a whole bunch of money to people that don't need it, so now they're just gambling it away because they don't care about it. Like, no one's saying, like, well, maybe that was a giant waste of cash. And by the way, if you give people another $1,400, they're going to gamble that too. Right? Okay? Well, HK, not that nobody needs it. The people that are doing that don't need it. Clearly, they're not saying, oh my God, I needed that money to pay my rent, or oh my God, I needed that money to pay my credit card bill, or oh my God, I needed that money to repair my car. They said, hey, I got a bunch of free money. I'm just going to gamble it on my Reddit group stock pick. And if it hits, I get rich quick. Like, they wouldn't do it if they needed the money. So anyways, I think that's the issue, that you have a bunch of, I'm going to guess here, a bunch of middle-aged men sitting on their Reddit group, stewing, probably writing giant paragraphs of their opinions on things, and then they go and gamble the money they didn't need. Like, that's the issue. Now, there were people that need the money, waitresses that were laid off because the government won't allow us to eat at Applebee's anymore. Why can't I eat at Applebee's? You might get sick. I'm not afraid. I want to eat at Applebee's. Well, no, we're not going to let you eat at Applebee's. All right, well then pay the waitress. Pay the waitress. Pay the Applebee's owner, because you're forcing them to shut down. Okay? So that's where, like, I'm a much bigger fan of smaller government. I understand there's a health issue, but look, right? By the way, in Georgia, I don't know if Georgia is not a reflection of all the United States by any means, but I actually went on a date with my wife on the weekend, and the restaurant was packed. All the restaurants here, you can't even get a parking spot. You have to have reservations. And what you do, and here's the funniest thing, you stand at the door with a mask, they take you to your table, and then you take your mask off. Okay? Every restaurant in my town has a help wanted sign on the door. Okay? Like, there is lots of work. Okay? Lots of work. At least those types of jobs are back. Okay? Yeah, same in Tampa. It's crazy, right? So anyways, so I would find the one, if I was the government handing out what we call transfer payments, I would target it. Okay, so like unemployment, okay, I get it. Jack up unemployment, great. Keep that extended from 12 weeks to 52 weeks. I'm cool with that. But I have a feeling that the free money, and now what Janet Yellen's going, oh my God, there's fraud. Maybe we should regulate the stock market somehow because this seems weird. Well, what's weird is the government got involved in the first place and gave people that didn't need the money. And they decided to gamble it because why the hell not? You don't care. It's not your money. So if you turn $500 into 10 grand because of your Reddit group, then awesome. But the government doesn't understand it's likely their fault. It's not the market being under-regulated. It's not the broker doing something wrong. It's not the Reddit group. Look, if social media wants to get together and jack short traders, then do it. Because people used to hate short sellers because they're like, short sellers are evil. They're hurting the market. No, they're pushing GameStop to zero because the company sucks. It's a dead model. So now if someone else figures that out and says, well, they're all short. They're so short, we can squeeze them out. So now they come along and squeeze them out. Good. This is a free world, man. Make money. Take the risk, make money. But the thing is, people are taking risks they normally wouldn't take because they got the free money. If it was their rent money or their medicine money or their food money, they wouldn't be degenerate gamblers on their Reddit group. Like, you have to... So now what? Wait till you hand out another $2 trillion. Guess what? It's the same thing like the stimulus packages or the government or the bailouts or bond buying programs. It creates these problems. But you have to understand when you do it, you're going to create a bubble. You buy $7 trillion worth of bonds, hey, you're going to have a liquid market, which means all asset prices will go up. But that's what happened in 2008, and that's what happened in the year 2000. Greenspan created the housing bubble. It wasn't subprime per se. It was the government. And then what? And then because they were paid to take stupid risks, they gave mortgages to people that don't deserve mortgages. Well, it's the same thing. If you give a degenerate gambler free money, they're going to gamble it. You give drug addicts money, they're going to buy drugs. Not that Reddit people are drug addicts. Don't go crazy on me. But you understand, like, you gave a bunch of people hundreds of thousands of dollars that are on the Reddit group, and they got free money, so they gambled it. Of course. What do you expect? You bail out a bank that gave a bunch of crappy loans to people that had no money. You bail them out, what are they going to do? They're going to do something like that again. They're going to be degenerate gamblers, right? So it's so funny to me. What they should do is just stay the heck out. Okay? The best thing that could happen is all the hedge funds lose money and all the Reddit guys lose money, and GameStop has a stock that reflects its fundamentals. That would be great. That'd be fantastic. Okay? Let people screw up. Let them screw up. Okay? I've screwed up much of my life, and they've always been the best learning experiences, and I'm better for them. Right? Can you imagine if you were telling entrepreneurs, like, you can be an entrepreneur, but don't you ever make a mistake, and if you make a mistake, you're a bad entrepreneur. Dude, entrepreneurs are not afraid of mistakes, but there has to be consequences. You bail out banks for making stupid loans, then what was the point? They should have had a fear of failure. Okay? Banks should have had a fear of failure. I know people back in the housing bubble, they were retired. They didn't even have income. They were retired, no job. They decided to buy a 150-year-old house. And in America, 150 years old is old. The foundation was made out of stones. It was stacked. A house was built on top of a stack of stones so that you can let the air in and stuff, right? Unbelievable, right? No income, right? They bought a 150-year-old wreck of a house. I mean, holes that raccoons could get through. And I'm not joking, right? And they got a loan, I think like no money down or low money down, no proof of income because they didn't have any income. And they bought that house. Unbelievable. Unbelievable. Because there was no negative consequence to the people doing the loan because they could get them to sign the piece of paper, transfer the money, sell that loan to somebody else, and then someone else sells that to the government. And therefore then AIG fell apart. Yeah, well, there you go. So it's just funny. So if proper risk management and due diligence was done, they wouldn't have got the loan. And we wouldn't have had a crisis. So anyways, all the way to this, I don't like it when Grandma Yellen's sitting around like, what should the government do? The government should stop doing stuff. They shouldn't have been in it in the first place. So when Grandma Yellen wants to get involved and get some more powers, what should the federal government do about GameStop? Oh, to me, that's scary, man. That's scary. Isn't it political suicide to let big businesses fail like that? Well, in the long run, you need to cull the herd. The sick and the weak must die. And also, it's stifling entrepreneurialism. So think about all the awesome entrepreneurs that would create a better bank. Do you know what I mean? There's probably better banking models than the ones that were handing out money to idiots and to poor people. Like, banks shouldn't be lending money to people with no credit, no income. It's just simple. So if they're the type of bank that does it, they should fail. They have to understand that. Or at least they should be hurt by their own failures. So they fire all the senior executives and managers. They gut the horrible, polluted culture that bank has. And they rebuild it up with good managers, good culture, conservative, disciplined approach to financials and money management, right? Or it should fail and be replaced by a bank that can do it. Okay? So like one of the things I did at Harvard was I redesigned the business model for Goldman Sachs, in particular their retail model. So they have a sort of a third prong. A third leg of their business now is focused on retail. And they own several businesses that are focused on that. Retail banking, retail money management, retail advisory, not just institutional and all that, and high net worth. And, the fact that like low fees, no banking branches, but access to millions of, ATMs, all that kind of stuff is pretty cool. Like banks could change. You don't actually need 10,000 branches to run a business. So anyways, there might be better models, better technology, but it'll all be stifled if the big boys keep gambling and then get bailed out. It's called a moral hazard if you want to look it up. So Janet Yellen, I don't think it's her problem because she's not the one that handed out the stimulus package. But I hope someone eventually realizes it is the government's fault. Okay. If you remember, I was laughing about it, I think early last week, about the unintended consequences. There's always good intentions, but the government screws everything up always. There's good intentions. We need roads, we need highways and all that. But you have to understand, America was created because they didn't like the king of England. They don't want a king. They also don't want a giant government regulating. Okay? Right? So in a command control economy, the government owns everything, including you, and says, Jim, you're going to work in this factory. You're like, but I don't like it. Shut up! Get in the factory, Jim. Right? And that's that. And you're going to make pots and pans the rest of your life. And nobody even likes the pot and pans. You don't like your job, so you don't even make good pots and pans. There's no competition, so you don't have to make better pots and pans. No one's going to buy them because they're forced to buy them. They don't buy them because they're better, because they're the only pots and pans. So the bigger the government wants to get, the more I think about buying inferior products that suck because I have to, and someone else forces me to dig ditches or work in the coal mine. I'm like, I'm an entrepreneur, baby. I'd like to make the world better. And they're like, we're not interested. Shut the hell up and get back into the ditch. Okay? Is that right, Cave? So anyways, yes. Hey, Miranda, thanks for bringing up Grandma Yellen. She's like, holy shit. Holy shit. What did I say? So anyways, check this out. So if you're a bear, you're setting this up. Okay. Alejandro says BTC in tomorrow's buy zone. That's cool. Remember, we got NFP, and that can be dangerous as well. So don't get too excited. Oh, thank you, Marina. Well, at least passionate, right? At least passionate. All right. So, yeah. Nothing has really changed if you think about it. So a bull has already done what a bull will do. Remember, the only thing I have here is a bearish trade plan. Well, you see a giant green candle. Like, why am I setting up a bearish trade plan? Because it's going to fall? No, it's because it would be very silly to buy now. Okay? So now your future thing is you could buy a dip around the corner. Okay? And then you're like, well, how do you know it's going to dip? Well, look. Look. That's where bears are going to sell. So either way, it's going to come down. It's going to come down if bears sell. It's going to come down if bulls take profit. Either way, it's going to come down. That's why I'm like, if bulls are going to take profit, bulls are going to buy it again, right? And if they're going to buy it down here. Why? Well, dude, look at it. It's support. We have like 19 different things that say that that's support. and bulls would buy down there. So you could use that to your advantage. Bears, on the other hand, would disagree with the up and probably give you something like this. Okay? Cool. Nice, right? Cool. All right, let's move on. Look, a bunch of news. Remember how I teach you. If you didn't prepare ahead of time, it doesn't exist. If you are now chasing this simply because it's moving, you're depriving yourself of your own destiny. You're robbing your own bank. Okay? You're depriving yourself of your own destiny. Okay? All right. So now let's do, we got some requests for some commodities. We can do that. Nat gas hit the monthly target last week. Yesterday. Someone asked me about it in the chat. I didn't get to it, but it's always sort of an interesting question. You're like, talk about nat gas. All right, well, it opened out a position. It hit it early, and it should counter trend. Okay? And it did. Cool. Okay? That's all. All right. Oil going up again, which is really good, supported by more OPEC rhetoric, increasing demand. So far, it's moving beautifully, huh? Right? Up, 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 down, down, buy. I guess I can draw it. Right? Up, 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 down, down, buy. 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 Okay. Okay. So it's gone from, let's say, 35 in November, and now we're above 55. Pretty cool. Tradable, right? See, in here I was reminding you that you guys lose a ton of money, or you give up, or you become a bull and a bear, and then a bear and a bull and a bull and a bear and a bear and a bull and a bull and a bear and a bear and a bull. And your trading very often becomes a mess because you're short-term only. And you just lose the fact that here's the new year and then the continuation. You got lost inside the new year, but we knew that the trading conditions will be mediocre. So I'm not saying I knew it was up. What I'm saying is, if all you do is stare at the short-term candles, you forget where you are in the context of where you're going. And then self-doubt comes in and all that kind of stuff. But the fundamentals are quite clear, at least the way I've described it, that there's a shift, D1 and D2. There's a shift going on in demand, at least in my opinion, based on macroeconomics, right? Meanwhile, supply is either cut or, at the very least, fixed. So you go from P1, price 1, to price 2, right? Just on the increase in demand. Why the increase in demand? Well, more global macroeconomic activity as we get through COVID. I mean, how 1,000 times we must have talked about this, right? So in here, though, you're like, man, it's done nothing for 2 weeks. I guess I'm wrong. Well, dude, fundamental analysis lasts for years, not days. Right? So that's what I'm trying to point out here, where you get lost in here, and then you don't have the confidence to do what you need to get done. Right? You lose your confidence, you don't take the trade. Lose your confidence, don't take the trade. Lose your confidence, don't take the trade. Lose your confidence, don't take the trade. And that's a double whammy, isn't it? Because then you're like, dang it, it took off without me. So the big question is, how would you address this so that you will improve? That's all. That's the more interesting question. Not what you've done in the past, more like how are you going to change to improve? And trust me, 20 years later, you're still going to be asking the same questions. What can I do to improve? If you're not willing to make those types of questions and analyze yourself honestly, you're going to have a very tough road, man. Okay? Okay? Yeah, Daniel says we use pivot points for taking profit, one aspect of the tool. Very much so. And you can also look at it this way. It helps you analyze what the other traders are going to do before they do it. Right? But I like to start the week or even start the month and say, okay, my projected high is this. My projected low is that. Then we also have zones in which are favorable for buying and zones favorable to selling. Well, which one is which? Well, remember, the tool doesn't tell you what to do. That's why I created the bias pivots. So therefore, you make your own decision. So it's very clear what are decent prices for buying and what the targets are. It's very, very straightforward. Then, see, that's still not enough. Then we use price action. Okay? Then we use price action. There's only two things I really, truly lean on. Price action and pivot points. Both are leading indicators, by the way. Okay? Things like, in a situation like this, we expect this and we expect this. Okay? That's actually in the training course. Okay? This stuff that's happened on nat gas, it's not even something you're likely watching. You would look at this and say, oh, it's OOP. We're going to hit the target early. And it's going to counter trend. Okay? Like, wow. So if I didn't have this, I wouldn't have known. Okay? Okay? And by the way, the general target would be down here. It doesn't have to go there, but it often does. Okay? But you have to understand this is uncommon. To be at this price, it went too far too fast. Therefore, this is massive profit taking. But again, you wouldn't have known to take profit unless you had these tools. So maybe other traders are using this tool, or maybe we just simply hit a massive psych level of 3.0, man, just massive. So if you were staring at your charts and you drove it up all this time, you were staring at 3.0 and you didn't know what to do, you either don't have the right tools or you're not using the tools properly. So you wouldn't be thinking, should I get out at 3? You're already out. Okay? Okay? Cool. Okay? Cool. Cool. There's our silver. Let's stay away from that. And gold I've been meh on. And maybe she's waking up, maybe not. So I think it'll get interesting down in here. I think it'll get interesting in here. Let's zoom in a little more. Okay, maybe a little less. Let me click out a little bit. Okay, I'm trying to get to this. All right. Okay, so in the first week of January, we thought gold would fall, right? How many can confirm that? Confirmed. Thank you, Daniel. Will anyone second the motion? Cool. Nice. So will this fall forever? No, but it's going to give us a really nice price. So right now, our eyeballs are on 18. Okay? And I'm just looking at price here. So let's add to this now. Let's change our point of view. I am still a bull. Oh, but Wayne, it's fallen hundreds and hundreds of blah, blah, blah. Of course it did. You took profit up here, right? Right? You took profit up here, right? So who cares? So if you took profit up there, being smart money, then we're going to buy it low, right? Cool. Nice. I like that. So now let's change this up. And let's say position trading bullish bias. Okay? And it's a bit low. Whoa. So how do I handle this? Don't buy it. Demand said what? Yeah. Yeah. I don't like it down here. I don't want to buy it here. So I will have to wait for something that tells me the market has decided to go bullish again. I might have to wait $100. Probably not, though. I'll probably try to get in here or something. Certainly, I'd say certainly like something like this might get me in. Okay. But couldn't it also fall down here? Yeah. So I'll have to wait. So this is why I use something called a confluence, because I want to see that monthly and the weekly together and see if one will allow me to get in before the other. Okay? So now I look at this and I have more information. Wait, you have so many lines on your chart. It's stupid. I love those hecklers. Like, wow, well, if I got rid of this, I wouldn't have known to look for this. And without that, I wouldn't have known that I might be able to front run a move back into my monthly trade zone. It's not too many lines. It's not too many lines. Okay. Maybe it's the moving averages. All right, we'll get rid of the moving averages if it hurts. Oops. Boop 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 boom. Boop boop boom boom. Boom 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 boom. Okay. And then we could probably change this out too. I can't tell which true or dreams. Deep down inside I feel my screams, but the terrible silence stops me. So let me go back to this one. All right, I can live with that. That might be too many lines for other people too, but what this tells me okay, is that sellers are going to stop selling right around here. Cool. So what I should do then is I should mark some of these things. I should probably recognize this, and I should probably recognize this, okay, and see me trapped in here. So I'm a buyer, but I don't want to buy this. Okay. Now, a scalper could do it, right? But not, right? Not me. Not there. Not for that reason. So if I was a bull, if I was me, my first opportunity would look like this. Maybe on Tuesday. My next opportunity would look like this. The week after next week. Okay? And you know what my target is? Look at that dropping. Now we're hitting the 18. We're hitting it right now. Okay? That plan needs me to hit a reversal at 18, and we're going up 200 bucks. Cool. Now, let's say none of these happen. Good. Well, if it doesn't do that, I ain't going to buy it, so what do I care? I'm still a bull. How do you know fundamentals, dude? Okay. What's the other way of doing this? We're going to watch it fall, because I'm a bull. And it's going to work its way down here. Next week, we will be somewhere between 1750 and 1700. And guess what I'm going to do? I'm going to look to buy. Nice. Okay. 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 Here's the thing. Let me tell you what we know. Bears did sell it there, and they're going for this. So they sold at 1867, and they're going for 1710. We could dumb this down and say 1850 to 17. Okay. Cool, right? That's what it says. It's not my opinion. That's what that says. That we're going to hear. So it's going to be difficult for me to just jump in, buying it at 18. Oh, but it's a psych level, Wayne. But look, but I'm not interested. That's all. If it rolls over and I get a double bottom next week, okay, yeah, maybe. But, you know, there's a lot of conviction, in my opinion, to get this even lower. But that's not for me to decide. That's just what it says. Right? But sometimes you can misinterpret poetry, right? You're like, oh my God, that's vulgar. And they're like, what? What they're saying here is just vulgar. It should be pornographic. This should be banned. And you're like, they're talking about spring. The renewal of life. Wait, that flower thing wasn't a metaphor? It was It could be misinterpreted is all I'm saying. I don't really misinterpret this. Obviously, this is that. I mean, it is. There's some support there. This is resistance, right? We know that because that's what the math is doing. We know that this is a weighted mean, okay, which the mean should be here. This is a slightly bullish mean. So we know that we're going through some sort of correction. And it could do this. But what we're also looking at, what it's telling me, is it's predicting this. Okay? But I don't really, I mean, there is and there ain't, right? So my fundamentals are going to be based not on these technical charts. So I'll just have to recognize this is support. And that might be where I get my turn. So I would look for it here. If it happened down here, I understand that technically. And again, because it's a lower low, I'd have to have at least a double bottom, preferably a 1, 2, 3. Okay. I need it to prove to me the market conditions have changed so they're favorable to me. I dictate the rules, not gold. I dictate the rules, not the dollar. Okay? So go ahead and chase it if you want. Good luck with that. Okay? Now, if you were a bear and you got the lower low and then you got the setup on Sunday and you sold that, you got paid and you were excellent. Okay? Excellent trade. And if you didn't do that, you shouldn't be on it, probably not even watching it. Irrelevant. Oh, but it's moving. So what? Right? It's like that cartoon with the dog, and he's having a conversation, and he's like, squirrel! So tell me about what your plan is for the rest of the year. Well, I'm looking at the macro. Oh, gold! Look at gold! Oh my God, gold moved. What? Oh, I'm supposed to be doing something. And you're like, no, you should have known it before it happened. That's what you should be doing. All right. Let's take a look at some yens. Coolio. Pig, obviously Oscar Mike. Up, 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 down, down, up, 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 up. Now we have a higher high on Goldie yen. CAD yen. Pound Oscar Mike, obviously. But I don't know. Maybe that central pivot had to do with things. I'd be careful here because this says down. Right? You see that? So I'd be careful there. If you're jumping in late, I wouldn't be buying. Okay? Maybe if you got that, but you'd have to be patient enough to wait till Monday or tomorrow. Probably not. Right? But that says down, by the way, right? You see it? Right? What? Yeah, you see it? I wouldn't buy it. Not there, not at that price. You can buy it at a different price, but I wouldn't buy it at that price. Make sure you know what you're doing. This is the one I was on. Too bad, so sad, right? Let me clear it up at least. Let's go monthly here. Okay, I was on it, and I don't even remember why I'm not on it anymore. I mismanaged it somehow. But anyways, yeah, there you go. I'm sure I bought it off that 21. I guess for whatever reason, I think I got spread out on the rollover or something. It would have been that close, right? So, whatever. Lost 3 pips. But now we have the higher high, higher low, 21. If you're still a bull, okay? Whatever. I'll leave that up to you. That's your call. That's your decision. Aussie was the other one I was on Sunday, and I was long here, got knocked out, and now we are stuck in the range. where the deer and the antelope prey for the range to break. So don't know what to do, and I'm okay not being in this because it could have been down here. I thought it was going to go there, and so far nobody's been right. So that's not the type of market I want to be invested in. Cool. So I'm out. Got my powder dry. I'm not staring at that. I'm not stressing about it. We can look at the euro yen. Somebody might blindly say this is M2, so you should be a buyer. You're missing the first thing. The first thing is market conditions. Do they match your bias? And I'd argue, no, not really. Okay. Catch you later, dog. It's kind of how I look at that. Okay. Nice, right? Daniel, I don't expect January to be a blowout month, so I would exit those and then regroup in the new month. Okay? So yeah, so there you go. So this is meh. It's barely going up, and therefore it can possibly come down. And I understand. Keep in mind, I understand what's happening here. That's why I didn't trade the Aussie, or I traded Aussie and I traded Kiwi, but I didn't trade Euro. Why? Because I expect Euro to come down. Okay. All right. So yeah. So Yep. Oh, I didn't do Biddy. Sorry about that, guys. Bitcoin. Let's go over the Bitcoin. We're in the buy zone still. Okay, we're in the buy zone still. Check this out. Isn't this nice? It says $38,773.47 and a third pennies. You should exit. Isn't that cool? Boy, somebody is probably wishing they knew that before it happened. Because remember, we knew that on February 1st. We had a pretty good number. Actually, February 1st isn't even there, right? We had that number, are these days? That was a day trade. Okay, so that was the projected top of yesterday. This was the projected the day before yesterday. This is the projected the day before that. So check this out. Buy zone, exit. Okay? Didn't get your buy zone. Okay? This is why they front run. Okay? Here's your maybe front run. Depends on how aggressive you are. But anyways, on this particular day, there's the exit. Okay? On this particular day, this is the exit. So it looks like some people held a couple extra days, right? There were some swing traders and some day traders. So the interesting thing now is the buy zone was $36,712.24. Pretty specific, right? Excuse me. Right? The actual was 36,808 versus 36,700. Could have been better, huh? Now, I don't think I would buy this way unless I was very aggressive as a bull. The way I'm looking at this is I'm treating the spike as an outlier. Okay? And I'm worried about things that could lead to more downward action. So for example, if I was a bear, I'd probably look at this as an inverse head and shoulders type play. And then we have this play. Okay? Which is another form of the same thing, head and shoulders, right? And you're like, but look at all these green. But you have to understand the opposite side of this. Because you know where the green is, you also know where the red is. And we know this is the sell zone, don't we? We know that this is next week's central pivot. And we know this is next week's M3. So therefore, I can carry this through now and say, well, if there are bears, I know they're going to sell at these prices. Even though I have it set for a bull, and I'm a bull. Yeah, I know, right? For sure. So these other moves were very obviously bullish moves. This one is not as obviously bullish. It's potentially bearish, and you should be able to read that. The market, for whatever reason, is not convinced we're going to get through 40,000 without a fight. Danny Boy says, hey, why euro yen expected to go down? It has to do with the euro dollar. And the euro dollar has to do with the USD. And the USD has to do with seasonality, not fundamentals. That's that. Okay, cool, right? Let's take a look at a couple more, and then I got to call it a day. I got to get ready for my swing trading group that's meeting at 2 p.m. today. Nice. I get all giddy. It's like a date, you get all giddy about it. Cool. So let's take a look. Maybe all of this is a random walk. Let's go into a smaller time frame. What do you think of that? It just randomly decided to bottom out at 17.92690. 1792.12. 72.90.12 we'll call it. Let's do it that way. Okay. Isn't that interesting? Not 18 is my point. Why not 18? Well, if you do the math, it says 1792.12. So it got down there, and you're like, well, wait, no, it dropped a little lower. Plus your spread. So it had to go lower to fill the orders. Oh, snap. So what should I do? Okay. Well, I shorted the central pivot. So therefore, if it was a swing trade, I expected it to hit 1792.12. You see that? I want you to put that into perspective. On the first hour of the week, I sold at the central pivot, which makes total sense to you, right? You're like, that totally makes sense. And at that exact moment in time, okay, let's say around 5:05 p.m. Eastern Time, I said, oh, well, based on that, I expect it to go to 17.92112. Okay. Nice. Could have taken profit. Okay. Maybe you mean not taking profit will be a good coaching example so that you say, well, Wayne, in that situation, I would like to take profit. I'm like, yeah, totally. Totally. I'm trying to show you it's unbelievably, ridiculously predictable. Not that it's going to happen, but if you use your tools properly, it gives you very precise numbers that are incredibly accurate some of the time, much of the time, but will always be somewhat helpful. Interesting, right? The trick here, of course, is to know that you're a bear, which I clearly knew. That wasn't a problem for me. So that made that so much easier, because then when the market opens at 5 p.m., I'm like, oh, not a problem. Okay? Nice, right? Great. So now what should I do? Well, I could do a couple of things. I could lock in 99.84 pips. Now, I think it's probably going to come up and hit that, come down, but whatever. Let's play with it. I got 99 problems, but a pip ain't one. Right? So there's one. I can move this one now to lock in 100 pips. Okay? Now, the interesting thing about that is that gives me an internal rate of return of 100%. For every dollar invested, I'll make $1. Minimum. Plus 300% annualized income. Okay? If I place these trades and hold them exactly 365 days, right? I'll make 300 pips in income per trade if I get knocked out or break even on the last day of the year. Same as earning 300 pips per year, extra bonus pips. Okay. Okay? Cool, right? So I think I can handle this slightly differently, though. Let me move this to lock in, I can't even see it now, 200 pips is about here, I think. So I'm going to move that to lock in 200 pips profit. Sure, it didn't do it. Come on. I can't go, that's 230, so this is about 200, I think. Okay, so that one's locked in 200, and I'll move this one back to break even. Cool. So now I got all this room. If it's going to continue, okay? And one stop is here, the other stop is here, and now my worst case scenario is only plus 200. Well, I can have more now if I wanted. So it comes down to conviction, right? No, it's not 100% a day. It's like 0.8% a day, and that's not actually true. It's a little off. It's not quite. So I guess it'd be pretty close to earning 0.5% a day. I think is about right. Peter, did I start the macro classes? Next week will be the third one. And starting next week, that class is going to be an entire first like freshman college level course on economics. So I'm going to attempt to teach you a full semester of college level economics in an hour or hour and a half, let's say. Now, of course, we're not doing any calculus and the math. We're not doing any of the math, but I am doing the concepts. So, like, I'm going to touch on things like the solo growth model and using the possibility frontiers curve to show why poor countries stay poor and rich countries stay rich and get richer, that kind of stuff. What do you think of that? Okay. I'm going to likely end it on terms of trade. Okay. Right? So we'll do terms of trade as well, because I need to explain why a country would even use trade. Like, why do we even use trade? Like, again, we're doing a macroeconomics course, so I could have easily just jumped in and said, okay, GDP is Y equals C plus I plus G plus X minus M, right? Well, there's more to it that, and like, why do we even care is what I've been focusing on. And then like X minus M, like that can't be a vague concept. Why are countries looking at exports and imports? Oh, so that they could consume things outside the possibility frontier curve. And you're like, dumbass, so what? Yeah, so when we get to that, I mean, and again, little questions like, why do countries grow at different rates or faster rates better than slower rates? And what is the big thing? And why do some countries and just inherently do better than other countries and all that kind of stuff? I mean, these are really big economic questions. And then once we understand all of that in great detail, and you have at least like 1 year worth of economic knowledge, at least on the concept side, then we can start doing things like downloading GDP from the government website and stuff like that. But right now in those classes, I've even taught people how to grab their own data from the Fed and produce their own charts where you can do your own analysis. Okay? So that's it. To me, it's a bit of a daunting task because I want to share so much, but we're talking about, very complicated questions, right? Like, do you know the solo growth model, for example? I was planning on doing a big class on it, and then I thought maybe I should just touch on it. And not get too deep into it. So let's see what this is. All right, accept. All right, so like, for example, I'd be showing you this stuff, right? Solving the solo growth model. Okay? And so this is the concepts that I'll teach you very quickly in the class. Okay? And I want to do it without having to do, I don't want to teach you, the coefficient of B is the capital share where the share of income that capital receives, right? Therefore, the output worker, like this is what you'd learn in a class. Therefore, output per worker is given through the following equation. Y is the alpha of K to the B, where Y is equal to Y over L, output per labor, right, per worker. and K is equal to K over L, the capital stock per worker. Under the assumption of competitive equilibrium, we get the following. Income minus expenditure identity holds the equilibrium condition to Y equals C plus I. Consumption plus investment, right? Like I'm trying to teach you this, which would be one meeting in an economics class for a freshman college student. And I'm trying to teach this to you all in an hour and so much more. So it's kind of a daunting task to be able to do that, but we are definitely going to touch onto the solo growth model. But you'll see that I will make it simple, because the best thing about me is not only am I a genius and I'm unbelievably good looking, but also my modesty. That's got to be the best thing about me, is my modesty. So I'm going to try to tackle that, and so that you understand. And I'm going to use that to show you why, like South Africa, for example, is different. I think I'm going to do Israel, and why Israel is different from the United States. Drop the mic. Shut up! So anyways, this is what I'm doing with my free time. I know you guys think I don't do anything, and you're probably somewhat right, but this is what is consuming my brain a lot. How am I going to teach you this? Okay? Right? I mean, okay. I don't want to get in, but we can at least do this, and we could at least take it this far. Okay. And then, of course, the alpha de labor could also be interpreted as entrepreneurialism, and I'm an entrepreneur, so I like that. But anyways, so that's what I'm doing on my free time. But you're going to be so smart, you're going to love it. So you're going to be in, like, oh, speaking about the Super Bowl, I just learned the solo growth model. Let's compare South Africa to Israel. Okay, so anyways, I hope you love it. I hope you love it. I hope you love it. Yeah, it's totally a big challenge, isn't it? Kevin, no, you guys, if I do a good job, it'll come across as obvious. The one thing I like about economics is that it's common sense. It doesn't purport to be perfect, so it's all about models that try to explain things. But when done properly, you'll say, well, of course. But when you do dive in, like, for example, I learned a lot of these concepts directly from people that are senior economists at the Fed, right? And they're so smart and so experienced that they don't think with common sense, per se. So you take a class there, and it's all calculus. And it's easy to get lost and just drowning in this data. But it's helpful to always back out and say, what is it trying to prove? What does it actually mean? Because it should be common sense. It's not about the calculus, it's about the common sense. So if I learned anything studying, I have a degree in this crap, right? So if I learned anything at Harvard, it should be that I should be smart enough to teach the common sense in a way that you understand it. Even though I obviously understand the math, I should be able to share the common sense. And from that, I have no doubt that you'll get it. And Wayne, you'll say, well, yeah, duh. So anyways, we'll try to get there. Okay. Cool. Oh, how do you join these? You simply become a member of FX Bootcamp and then join the swing trading group. So you go to fxbootcamp.com, you pay to be a member, which gets you access to 35 to 50 hours of training videos. And then on days like today, if you upgrade to include the swing trading group, every Thursday the swing trading group meets to set up trades for next week and the rest of the month. But on Tuesdays right now, I'm doing that as a special reward to the community. So it's just included with your swing trading group membership. You're welcome. Oh, where's the entry? You know that thing called the War Room where I do live training? It would be that. Okay? Cool. Yeah, easy peasy lemon squeezy. All right, so the stock market's open. You should have what you need for your day. Peace on earth. May the pips be with you. May your profits be above average. And if you're in my swing trading group, I'll see you in a few hours, 2 p.m. Eastern time in the War Room. So, have a best day ever. Cheers.